Thanks for joining David, Kevin, and myself for the market update for the month of December. We hope you all had a fantastic holiday season. I know all three of us did. I'm looking forward to hearing David and Kevin recap 2023. But for the month of December, the S&P 500 was up 4.4%. The S&P TSX was up 3.6%. And the FTSE Canadian Bond Universe Index was up 3.4%. So Santa Claus gave us all a little early Christmas present. As always, if you guys have any questions, you need anything, please don't hesitate to give us a call. Take care, and I'm passing you over to David and Kevin.
In many ways, 2023 turned out to be the opposite image of 2022. In 2022, inflation was roaring, and in response, central banks increased interest rates at the fastest pace we had seen in decades. As a result, both stocks and bonds performed poorly in 2022. In 2023, inflation was still a bit of an issue, but it did moderate quite a bit over the course of the year. And as a result, central bankers slowed down the pace at which they hiked interest rates quite considerably in 2023 and mostly kept interest rates on hold in the second half of the year. In response, both stocks and bond markets did quite well in 2023. In the United States, the most recent inflation reading came in at 3.2%, which is a far cry from the 9% rate that we saw in the summer of 2022.
2023 was the year of the Magnificent Seven. Now, the Magnificent Seven refers to the 7 most valuable companies in the S&P 500, and they are Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. At some point throughout 2023, each of these companies' market capitalizations eclipsed $1 trillion. All of the Magnificent Seven companies suffered major stock price collapses in 2022, only to recover spectacularly in 2023. Despite significant rallies in 2023, 4 out of the 7's market valuations are still below their peak valuations from the beginning of 2022, those being Tesla, Meta, Amazon, and Alphabet.
The total return for these 7 stocks in 2023 was nearly 100%, whereas the broad market S&P 500 was up 24% by the end of 2023. Many of the Magnificent Seven stocks are benefactors of the frenzy and hype around artificial intelligence. AI has captured the imagination of investors much like the internet did around the turn of the century. All the companies in the Magnificent Seven, to varying degrees, have made significant investments in AI or have found ways to harness the power of AI within their own operations. Or, in the case of Nvidia, are building the hardware required for AI to continue to grow.
2023 saw a lot of economic volatility, though in the end it did yield positive results. We saw regional banking turmoil, conflicts in the Middle East, record fluctuations in interest rates, and the hopes of a soft landing. The economic environment was anything but smooth sailing for investors in 2023. And yet, despite all the negative news and the will there, won't there be a recession debate, 2023 overall was a great year for investors. Now, we have a lot of people saying, or we've heard a lot of people saying that after the pandemic and when each of the things that I listed above came up, we just got to get through this or we just got to get through that. And it's important to remember that every year there is something new for investors to fret about, whether it be geopolitical or the economy. That has been the case and always will continue to be the case every year. And with that in mind, we can see 2022 and 2023 as just the latest examples of how staying patient and not making rash wholesale changes to your investment portfolio can pay off. In 2022, no one was spared. Stocks were down, bonds suffered, and in 2023, we've seen the pendulum swing back, as we typically do after a year like we saw in 2022.
Overall, we expect next year, 2024, to be a much less volatile year as far as the economy goes. In 2023, we saw interest rates start the year on 10-year bonds around 3.5%, then they shot up to close to 5%, only to finish the year at about 3.8%. We expect that interest rates should be a lot more stable next year. We expect that the labor market should return more to a normal level. It's been extremely robust coming out of the pandemic. And we expect that to be a little bit more normalized. Overall, next year, we expect things to be maybe characterized more of it as a return to normal year, which of course many of us would welcome. A little bit less volatility economically speaking, and hopefully as well in the stock market itself too. As always, if you have any questions, feel free to reach out to either Kevin, Harry, or myself. And just a reminder, it is January now, so it's the time of year where we'll be steadily, proactively trying to reach as many clients as we can with either emails or phone calls about topping off tax-free savings accounts. If you do have cash that you want to add to your tax-free savings account, whether it be from an investment portfolio already here in a non-registered account or new money that you'd like to add, feel free to reach out to us and try and beat us to the punch. But otherwise, we will be touching base with you early this year to top those off.
Take care.